This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashir. Thanks for joining us at XM.com. The US dollar climbed to fresh 20-year highs on Thursday as investors ramped up their bets that the Federal Reserve will have to get even more aggressive to bring down burgeoning inflation in the United States. America's Consumer Price Index rose by 8.3% year-on-year in April, beating forecasts of 8.1% and moderating only slightly from March's four-decade high of 8.5%. The data has solidified expectations that the central bank will hike interest rates by 50 basis points at the next two meetings. And whilst Fed policymakers have in recent days been playing down the prospect of the need for a larger increase, the odds for a 75 basis points move could gather pace if next month's print again shows that inflation will remain sticky for some time. Investors initially struggled to make sense of the data, sparking some volatility. But the dollar index hit a new high earlier today and was higher across the board, with the exception of the Japanese yen. The increased risk aversion is boosting the safe haven yen today, as the growing threat of a recession seems to be overshadowing the monetary divergence narrative. For the UK, recession fears have already pummeled the pound, which has plummeted to fresh two-year lows today. The British economy unexpectedly contracted in March, though it managed to grow by 0.8% for the whole of the first quarter. The Eurozone economy is also slowing, but unlike the Bank of England, the European Central Bank is gearing up to lift interest rates in July, with President Christine Lagarde this week joining the chorus of hawkish voices. Nevertheless, the euro slid sharply on Thursday to brush a more than five-year low. Worries about how far the Fed and other central banks will have to go to get inflation under control pushed equities back into negative territory on Thursday, following a dip on Wall Street on Wednesday. E-mini futures are pointing to further losses today, dragging European shares sharply down too. Aside from monetary tightening and the ongoing lockdowns in China, there are renewed concerns about Russian gas flows to Europe, and the UK government is threatening to tear up key parts of the Northern Ireland Protocol, all of which are amplifying the doom and gloom in the markets. This was today's Daily Market Comment. Thanks for joining us at XM.com.